Hey everybody, welcome back to Ryan Makes Sense, where today we are looking at ticker symbol OPEN, Opendoor Technologies. This is the company that you may or may not know. They were appraising houses digitally based off of nearby comps, either highballed or lowballed, depending on what part of the real estate market cycle we are in. Um, so that's where we're at with this one. It's a penny stock now. Um, I've always wanted to do a little dive into this one, so I think I've got my chance here. They do have earnings later today, so let's dive in. To the upside, um, just really quick, it looks like we have a gap at $4.15. 352 and 263. So if there is a positive earnings, look out for those three levels. Um, and it looks like we just closed the gap down here. When I say, I don't know why, I say we, Opendoor closed the gap down here. I don't have any positions. So if and when a stock, this is just my belief, if and when a stock is going to make a long-term reversal, it wants to close all of the gaps on the downside first. Not always, but normally, in my opinion. And they have done that. So what I really want to know now, does this stock deserve to be at $2? What are hedge funds and institutions doing? What does my calculation say? What are their assets to liabilities? What is their debt? Are they still making outrageous offers to the buy or sell side? Let's just dive in. Let's just dive in. So there it looks like there's no more gaps on the downside. So by this getting closed, if you are bullish and optimistic on Opendoor, this is something to be optimistic about because all gaps have been closed now to the downside. Now we got to work, not I say we, now they need to work their way up to the upside. So we're going to go in my old fashioned. We're going to look at the bigger picture. And this stock went from around $38 to 84 cents. So um, the strength is 41. Momentum looks a little interesting. Um, it's heading up. I don't really see a turn down yet. Money flow, it's been going up over the span of 2023 to about the end of 2023. Money flow has come in down here on this dip, and now money flow is kind of like made a little break, and I don't know if more money flow is going to come in to be determined. Relative momentum scraped the bottom blue line, has come up, flatlined. So in terms of these four different technicals, this stock could be extremely volatile and change the trajectory of all of these in one trading session. So don't base an investment on the day of earnings. Look at the bigger picture. So based on all this, I don't really have a good image. For the money flow, we're going to look at institutions and hedge funds. The momentum right here, moving average, convergence, divergence, and the relative momentum indicator. These are both iffy to me. They don't say bearish or sell. And strength is at 41, and it looks like it could just change up pretty quickly. So I'm a little conflicted there. Sales have been all over the freaking place. Shares outstanding in 2019, they had 83 million shares outstanding. 2023, 677 million shares. Dilution to the max. That is not good. Earnings per share is going the right way. Sales went from 4.7 billion, 2 billion, 8 billion, 15 billion, 6 billion. So what will 2024 have in store? We're going to find out during the earnings call. I'm not going to tell you. They are almost profitable. For all the bears, they're almost profitable. We're going to look at the debt. Don't worry. It doesn't look like they are paying off their debt, which is kind of scary. Um, EPS for the past 5 years, 44%. Sales past 5 years, 50%. Both good. Okay. EPS this year, negative 76. That's crazy. Okay. And it looks like in 2023, they guided the next year, 2024, which is our current year, to have 22% EPS. So, earnings per share. Okay. Um, we're going to run my calculation. And if you're wondering where my calculation comes from, I used to work at a microcap company. We had financial regulators come in and they essentially told us that the price of the stock is dictated by sales revenue. And every $100 million in sales is equivalent to $1 stock. So they make 6 billion, but they lose 275 million. We're going to go ahead and look at the cash and the debt. They have $1.6 billion in cash plus 1,609,000,000. That's insane. Total debt is 2 billion. Not that bad. Minus 2 billion 534 million. Okay. And then total assets is 3.5 billion, total liabilities 2.6 billion. So their assets dwarf liabilities, so that is a good thing. If you've seen my videos before, and if you Google what happens when you have more liabilities than assets, that is not the situation with Opendoor at the moment. I mean, they could literally take all their cash and pay off about a billion in debt. But I mean, why not? Put it to good use. So going back to my calculation. All right, we're gonna take this and we're gonna divide it by 554,400,000. Potential $12 stock trading at $2. Is my $12 price target insane? Yes, it is. So, two things. Number one, they are almost profitable. Let's go ahead and actually check that out. How are they almost profitable? Let's see. Okay, yes. They went from, I mean, honestly, okay, going back to 2019, they haven't made much of a dent, but they've been all over the place. Negative 1.5 bill, negative 275, 275. So let's look at quarterly. It's going to give us mixed anyway. So profitability is close on the horizon. You have people selling down here, and there's no options exercise. This tells me little faith. CEO is selling a lot at $3, $4, 258. So yeah, I'm not really compelled at this one. Let's see what institutions and hedge funds are doing. So institutions own 56.47%, and this is older data because FinViz does not update as often as Fintel, and this is Fintel. So again, old data says 56, new data says 67. That's a 9% differential. And I'm just going to blow this up really quick. And then I'm going to go back to the chart for reference. 2022. Okay. 2022 is like about the big decline. So 2021. So wow, there's more institutional ownership now than there was during the big spike here. So that's kind of crazy. What does Vanguard and BlackRock own? Did they increase their positions or decrease? Let's find out. Or do they not even own it? They do. BlackRock owns 50 million shares. They just bought that in January. Goldman Sachs, wow, they decreased from 45 million down to 4 million. So these two purchases, Goldman and BlackRock, basically wash each other out. Vanguard purchased almost about 18 million shares. Wu Eric Chang Wei sold about 12.89 million. So overall, more buying than selling in the top owners. Seeing some red, green, 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 red, red, green, green, green. So, and the more red, just very interesting. They are close to profitability. Um, let's do some charting on this one because why not? This is charting for the last year. All right. That's one channel. And I chose this channel because there's clear resistance and support, support, resistance, resistance. And then we have one, two, three times it's been tested, no luck. And then we also have our gaps here, which I talked about on the upside. On the downside, if this stock does happen to go down, which can happen, we're looking here for support 182 on the downside. Even further downside, ooh, I said we closed all gaps, but I lied. Did I lie? Let's see. Day max. We want to do the day. I don't have day max. Let's go back here. So yes, there is a gap down here at $1.40. $1.40. We did not close all gaps like I had said. So $1.40 is, I think, where we end up, which is exactly where the gap is. Right there, right here. So, yeah. If it has earnings that are bad, I say we go to $1.40, maybe even further down. I don't know. To the upside, if this does spring up for whatever reason, $3, and then I think 427. And then we do have this gap that I mentioned right there, and then we also have this gap that I mentioned as well. So 261 and 415. But again, I think these lines are going to be more accurate. So that is my opinion on Opendoor. No position. I don't have any appetite for a position at the moment. I do think if they say they're going to be profitable this year, we could see the ship turn around in a major way to the upside. And I'm going to regret not buying in. But at the same time, yeah, we're just in a tough market. So, real estate market. So, honestly, risk to reward, I think favors the reward side just because this is pretty low historically. Vanguard added, I think, and then BlackRock added 50 million shares. So that's my 2 cents. It looks like their earnings, the past three earnings they've had, maybe the past these three, or I guess these last two earnings, you could see it took a few days for the news to set in. And then it took a few days, the news set in, and it was choppy and came down. So again, we might not see much volatility on earnings. It might be a few days later. So just a heads up. If you've made it this far, consider subscribing. Leave me a comment. Post a like. If you're in this one, good luck. Patience, patience, patience. You never know what's going to happen. Until next time. Thank you.